Alright, hello everyone, and welcome back to the daily update of my 1000 days challenge. This is day 902, so let's get things started. Alright, so basically, we look across the board for US equity market. We did see a red bearish engulfing candlestick for the US equity market itself. So very clearly, we have a potential shift of momentum back towards a more neutral to potentially bearish sentiment in the next short to mid-term, which is around the next 1 to 2 weeks perspective. We are seeing some sort of support over here at the moment right now, but bearing in mind that this kind of red bearish engulfing candlestick and the fact that overall we are still leaning towards a downward trend on the daily macro scale basis, we're definitely still towards the bearish side, sentiment side of things. But bear in mind, we did form a higher low, but until we form a higher high, then that is still objectively considered a bearish or at least the best case scenario neutral kind of a sentiment. So a similar case when you're looking in terms of Nasdaq, we are still looking a little bit more towards the bearish sentiment, whereby we are still forming distinctively lower highs in that sense, although we are potentially forming a double bottom or even consider a triple bottom over here. And moving along in terms of the China equity market itself, we definitely do see signs of strength, like what I mentioned. But bearing in mind, this could be a formation of a completion of a fifth wave kind of Elliott wave formation itself. And this could also be a first wave kind of a rising diagonal. In which case, we have a very strong retracement back towards even near the $27 mark itself. And even then, technically, you'll still be relatively healthy. But bear in mind, if we do have a less of a retracement, there will be a much more of a key sign that we could be seeing a much more stronger push for the third wave instead. So that is something that we definitely want to see. And if you similarly, if you look in terms of period wise, we potentially has formed the fifth wave completion of the Elliott wave. And if we do form this retracement right now, removing this perspectively, if we take from all the way to the low, all the way to the high, we are potentially seeing, we could potentially see a retracement, strong or healthy retracement will definitely be above the $28, which also coincide with these 200 simple moving average on the daily chart. So that's definitely something we want to see, and there will be a value, area of value whereby we want to get into looking in terms of a new trading setup and position wise. And finally, for Bitcoin itself, we do see a clear rejection over here on the 200 exponential moving average on the daily chart. Well, I did mention that consolidation over here would definitely be a potentially good sign. We have a quite of a parabolic jump over the past since 10, or we can say around the 10th of January itself, we have a spike for a couple of days whereby we're growing exponentially, both in terms of price and also in terms of volume wise. And hitting over of here is definitely a potential false break setup. Ultimately, we are at the best case scenario forming a double kind of top formation, which still leans towards a bearish kind of sentiment. But it could potentially, and we do definitely want to form a higher low, and the higher low definitely and preferably above these 200 simple moving average on the daily chart, and then we find a very nice bounce, and then will form a very good signs of strength. On the other hand, if we do break below that, we still have some sort of potential strength, but that will be a much weaker kind of a formation. So for Bitcoin itself, instead of a fifth wave kind of formation, it's going to be forming like a 1, 2, 3, and potentially this could be the fourth wave count before we have a potential fifth wave towards this 23K region or even this 24K region itself. So yeah, on the 4-hour chart, I don't see any potential nice setup simply because right now we haven't retraced sufficiently yet. So I'll be staying clear of the market ever since yesterday when I closed with this. Once this candlestick formed, it was a very clear false break setup. But I also did mention that why I would not enter a short, because if I enter a short directly over here, over here, and then we put a stop loss right over of this swing high, the risk to reward to at least be a very decent way of being here. And you'll realize that yesterday, even though 50 simple moving average was here, now the 50 simple moving average catch up. So if I did keep continuing decreasing my target profit region itself, because as time passes, my target profit decreases. And that's something that I do not like when I counter trend trade, because ultimately my risk to reward will be quite poor. And that will mean that I have to have a very high accuracy to actually compensate for it. So this is something that I do not like when I counter trend trade. And it also means that you have to have sufficient numbers of trade to balance out statistically speaking, even if this is a common trend and pattern that does happen. I will still need it to happen by a significant amount in terms of the probability wise to have a significant edge. And for edge to play out, especially when it's very small, will also mean that I need to take a large number of trades. Whereas for probability of trades that do go in terms of high probability wise, that would mean that less trades, and that will mean less trades are needed to see a statistical edge in that sense. Yep. All right. So with that said, oh yeah, and also that will also allow you to play a much higher kind of position sizing when you're talking about a trading strategy that has a much higher kind of win rate and probability perspective. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop by your comments below, or I'll see you guys tomorrow. Take care.